So the paper indeed is about whether OPEC members know something the market doesn't. Well, that's sort of a truism. So let me go to the next question, which is really, more specifically, we are asking whether fair price pronouncements by officials from OPEC-linked countries or from OPEC-linked institutions have an impact, have a meaning in terms of the market price of crude oil. This is a paper that is joint work with three friends of mine, Celso Brunetti from Johns Hopkins University, Bahatin Büyük-Şahin, who was at the U.S. Commodity Futures Trading Commission, is now at the International Energy Agency in Paris, and Kirsten Zonneson, who is with the US CFTC. I am with American University in Washington, D.C. I should specify over here that I do have a second hat, but that's not the one that I'm wearing today. In other words, I'm here as an academic from American University. And the paper that I will be presenting, the opinions that I will be expressing, what you will be reading, has absolutely nothing to do with the IEA, the member governments, the CFTC, the commissioners, other staff at the CFTC, or anything of that type. So I want to be absolutely 100% sure, especially after the wonderful introduction that I got, that this is absolutely clear, that this is Michel, the academic, over here, and nobody else. All right, without further ado, let me give you a little bit of the background, and you'll see right away where we're coming from. I'll give you a couple of quotes over here that I called in the last couple of years. We started this project, and I started thinking about it in 2008. In the summer of 2008, we really started getting on it in 2009, and what you're going to see over here is an updated version. We're revising it at the invitation of the Energy Journal. This is an updated version of the one that you have available on the SSRN. Without further ado, here are the quotes. So here is a quote from Reuters. We expected at the start of the year oil prices between 75 and $80 a barrel. This is a fair price. Oil prices might rise reasonably. Saudi Arabia's King Abdullah said. On Thursday, U.S. crude oil futures prices rose $1.38. So there's this juxtaposition over here in a news story of a statement about the fair price of oil by the king and a change in the price of oil. It is not just newspapers or industry newsletters in the energy sector that do refer to oil prices. Even in institutions such as the EIA, the Energy Information Administration in Washington from the US DOE, has this in their February 2010 short-term energy outlook. WTI prices stabilized between 70 and $80 a barrel. They have done that since the middle of last year. This range is consistent with the fair price range for crude oil that was proposed by King Abdullah at the beginning of 2009. And so you get that impression over here that as the quotes illustrate, news agencies, market commentators, and even oil analysts seem to often point to OPEC pronouncements about the fair price of crude oil as relevant to the market price of crude oil. Now, the last two quotes that I gave you give the impression that somehow this was relevant, and because this was the fair price level, that's where the market price of oil should be. Yet, about a year before, which is when I started thinking about this, this topic, during the oil price surge of 2008, you had pundits and some politicians who were coming and using fair price statements, fair price pronouncements by OPEC-linked officials as evidence that sky-high prices were not caused by physical supply and demand factors. So you have these two sets of quotes, and both of them actually, even though they look very different, have somehow the same implicit assumption. The implicit assumption is that OPEC-related fair price pronouncements do contain information that is not already reflected in the market price of crude oil. And that's precisely what we're going to be going after over here. Is that the case? So our paper is a simple one. We're going to ask whether fair price pronouncements have an impact on the futures market price of crude oil. Okay? So the first observation over here is that OPEC members, either individually or collectively, often make statements as to what a fair price of crude oil should be. And what we're going to do is we're going to hand collect those statements. We're going to go and look at them and read them and construct a sample of all fair price pronouncements in the 2000 through 2010 period. So we start in January 2000 and we end in December 2010. Now you're going to say, wait a second. what is fair price? I mean, this is not classical economics. There is no definition of fair price. So what we're going to do over here, I mean, there is a whole literature about the ethics of what is fair in pricing and so on and so forth. That's not where we're going over here. We're going to take a very simple view. We're going to define the fair price of oil as the price that a particular OPEC producer would like to see prevail. So that's the definition of fair in this paper. And then we're going to investigate, both graphically and more formally with a battery of tests, whether those fair price statements contain any new information. That is news that is not already contained in the market prices. Okay? Now, are we the first ones to be thinking about what OPEC might be saying? Well, as the numerous presenters who preceded me on the podium today have illustrated, there is a ton of literature on OPEC written by them and by other people. What is more related to what we have over here, oops, that is not what I had in mind. Whoops, we're back on. The little red button is the one that I had in mind. All right. So basically, the idea that OPEC might have an ability to influence oil prices, what is particularly relevant in that literature, in the very broad literature about our paper, are two substreams of the literature. The first one is dealing with OPEC's official prices. There was a literature that started in the late 70s, runs through 1980s. Dave Green is now gone, but basically Dermot also had some papers. Basically, whether those official prices basically are efficient, the efficiency thereof. The second line of literature is post the 1985 collapse of prices, is whether production-related OPEC conference announcements influence the market price of crude oil. And there the evidence is very mixed at best. There is not much evidence that seems to have an impact. So people have looked at the price level, they've looked at the returns, they've looked at the risk premium, they've looked at the volatility, but basically the bottom line is that no, it doesn't look like it's having much of an impact. Now, that's on the energy economics side of things. On the financial sides of things, and that's where I came from on this project initially, is whether futures market prices react to OPEC conferences. There are a couple of papers in Journal of Futures Markets that basically find that no, that's not the case. Finally, and further afield, going away from energy economics, but going to economics at large, there is a literature about the impact, the possible impact of verbal interventions in markets. And there people have focused on foreign exchange rate markets. Basically, does what central banks say have any impact on foreign exchange rates? And likewise in interest rate markets, do central banks actually, through their statements, influence those interest rates? And so we're going to be drawing some of the techniques from that literature to what we have over here. Okay? So the contribution that we make over here, and I'll summarize it in three bullets. The first one is that as far as we're aware of, and I'd like to know otherwise, but I'm not aware of that, we focus on OPEC statements that are related to prices, not on statements that are related to production. In the last 25 years, that's the first paper since that, well, last 20 years, that's the first paper to really focus on that. The second is that people who have looked at OPEC pronouncements have been focusing on conferences by OPEC. They're typically well announced ahead of time. You know that those things are coming and stuff. Those fair price pronouncements that we're going to be looking at, there is no specific pattern. They're not timed with any predictability. And so it's unlikely that they're forecasted ahead of time. So if there's any information content, we should be seeing it having an impact on the price. And finally, there is some methodological contribution to the literature, but I'm not going to go through that. Okay? So here is a simple picture that illustrates what I think we have. Okay? So in blue over here, what you have is the nearby futures price of WTI sweet crude oil. Okay? We've looked at the picture with other benchmarks and so on and so forth, but as illustrated earlier, I mean, you get the same thing no matter what you put in there. Okay? So that's the market price of oil. In red are the fair price pronouncements. So basically, we looked, I'll explain the data set in a moment, but we come through about 1,200 news stories to cull from this about 100 actual news events. And after cleaning up for those things that were not very clean, we get 78 individual stories that are separate fair price events. Sometimes on the same day you have two different countries that say something. Sometimes within a couple of days you have several countries that say something. And so therefore we're going to whittle down the sample for the econometric analysis to 78 separate events. But over here you get an idea as to what's going on. And so what you see are basically a regime through about 2003, as the previous speaker was just mentioning, in which there was a range that was between $22 and $28, really 25 pretty much all the time, sometimes a little bit above, sometimes a little bit below, that people would make statements about the fair price of crude oil. But basically, the price is fairly flat, and it doesn't look like the fair price is really driving the price back down. And then, starting in 2004, we're up, and away we go, and you see the fair price series go, but with a lag. And that's precisely what you're not expecting to see if there is any information content. If there is information content, the fair price pronouncement should be leading the market price series. I don't know about you, but to me over here, it doesn't look like that's what I'm seeing. Okay? Then you have the episode over here with the run-up, and everybody seems to be stuck in making fair price pronouncements that the fair price of oil is 100, but guess what? The market price has since then collapsed. And again, over here, we have a series in which it looks as though the fair price is reacting with a lag to what's happening in the market. Okay? And then we have the recent episode of fairly stable prices, but of course, define stable, I'm not going to go into that, with a bunch of fair price announcements. So basically, what I'm getting from this picture is what I expect to find in the econometric test, is that basically the fair price series is really like the market price series, but observed discretely and with a lag. That's what it looks like. Okay? So in words, now I've shown you a picture. Now in words, what am I finding over here? What are we finding over here? Well, if the fair price pronouncements contain news from for non-OPEC market participants, be it signals of physical market conditions they have information about that nobody else has information about, or signaling some new strategy by a country, by a group of countries, then we should observe an impact on crude oil futures prices. But in fact, we find that fair price announcements seem to add very little to pre-existing information, and they seem to have very little impact on the futures price of crude oil. Okay? So I'll now look at the following thing. Now, you might tell me, well, wait a second. I mean, you're lumping everybody together. You're putting Saudi Arabia together with Venezuela, with Libya, and so on and so forth. How about you differentiate between those guys? And then it looks like you have two different periods over here. You have pre-2004, then you have the 2004 through 2008, and then you have the post-2009 post-crash period. And so therefore, perhaps we should be separating. So let me do this, but first let me talk about the data. Let's be clear about what we're doing. Okay? So what we did is we looked through LexisNexis Academic and through the Westlaw database to find news stories that would report quotes, explicit quotes, by OPEC officials or senior government officials from OPEC countries that were being quoted over there. And basically what we looked for was news stories that were mentioning either fair price or just price. So we only looked at news stories in English. We double-checked also that everything was fine. We got about 1,000 articles, in fact, a little bit more than that, and we had a total of 120-plus events over here. After filtering, we get 78 unique observations that are sufficiently apart from one another that you can really look at the information content of each of them. So we have about 90 total, but some of them are too close to one another, so in that case, we take the first one. Now, the information that we collected, and we cross-checked this with industry newsletters, which are really ground zero for where the information comes in. We look at the release date of the story, the statement date, the country of origin of the OPEC official, the fair price level or range that is being mentioned in the story. And when available, sometimes the official says explicitly, we agree with the price of oil. Sometimes they say explicitly, we think this is a crazy price. Well, they don't say crazy, but they say we don't think that the price of oil in the market at the moment is reflecting anything, and so therefore we disagree with it. And finally, if there is any information about the benchmark crude oil price that is being used, then we put this also. Okay? So that's the fair price series. Now, that was the hard part of the paper. The easier part of the paper, because that you can download fairly easily, is the market price series. So what we do over here is we use the West Texas Intermediate Light Sweet Crude Oil Futures contract traded on the NYMEX. Why? Because this is the world's most liquid futures contract on crude oil. This is where the price discovery is going to be taking place.